Hey everyone, and welcome back to the channel. Today, we're taking a deep dive into one of the most volatile and talked about stocks on the market, Palantir, ticker symbol PLTR. This stock has been a roller coaster, and in this video, we're going to break down exactly what's happening with the stock by combining fundamental analysis with my personal technical view. The first question everyone is asking is, why did the stock drop so rapidly after its massive run? The answer lies in the fundamentals. To start, Palantir is a software company specializing in big data and AI for both government agencies and commercial clients. But recently, the stock has been in a steep decline. The recent drop can be traced back to the simple fact that the price got way ahead of the company's fundamentals. The AI hype around the stock was immense, but it led to a valuation that many, including prominent short-selling firms, considered unsustainable. These short sellers argued that the stock's price was disconnected from its fundamentals, and the market has since reacted sharply. On top of that, there's been consistent insider selling from executives, which, regardless of the reason, often sends a cautionary signal to investors. Now let's look at the hard numbers you provided. When I look at this data, I recognize a clear narrative. First, let's talk about the incredible growth. As you can see from the numbers, Palantir's total revenues have been on a fantastic trajectory. The revenue grew from a little over $1 billion in 2020 to $2.225 billion in 2023, and it's projected to jump all the way to $4.162 billion in 2025. This explosive growth is a very bullish sign that the company is successfully monetizing the demand for its data platforms. But the real story is in the shift to profitability. Looking at the operating profit line, we can see a dramatic change. Palantir moved from a heavy operating loss of minus $1.17 billion in 2020 to being profitable with $120 million in operating profit in 2023. Now look at the future. That profit is projected to skyrocket to a staggering $1.934 billion in 2025. This tells us that as Palantir's revenue grows, its profits are growing at an even faster rate. This is what we call operational leverage, and it's a sign of a very healthy and maturing business. And there's an even better story to tell here when we look at the free cash flow. Free cash flow is a critical metric for a growth company like this, as it tells us how much cash the business is actually generating after all its expenses are paid. It's a truer measure of a company's health than just operating profit. And when we compare the two, the story gets even more exciting. Palantir's free cash flow has been exploding, going from just $183.7 million in 2021 to a projected $1.930 billion in 2025. This is a massive jump that not only confirms the company is profitable, but shows it's a powerful cash-generating machine. This strong free cash flow gives the company immense flexibility to reinvest in the business, make acquisitions, or return capital to shareholders in the future. However, the valuation remains the elephant in the room. The forward P/E ratio is telling a different story. Even with this strong growth, the P/E ratio for the last 12 months is still an incredibly high 183.4, and it's projected to be 59.4 for 2025. This means the market is betting heavily on flawless execution and continued explosive growth for years to come. Any bit of negative news or even a slight slowdown can cause the stock to fall, which is what we're experiencing now. The drop is a natural reaction as the market reevaluates whether the stock's price is justified. This brings us to the charts, which have been my guide throughout this recent volatility. My technical analysis has proven to be a reliable compass in this market. For months, I was watching as the stock approached my short-term price target of $179 to $210. I recognized that the momentum was unsustainable, and when the stock hit around the $180 level, I took action. I sold the major part of my position because from a technical standpoint, the stock was overextended and looked exhausted. I firmly believe that was the major high for this cycle. Now I'm waiting patiently for a correction to play out. My next short to medium-term target to either buy or trade the stock is a significant support zone between $94 and $144. This is the area where I expect the stock to find its footing and where I would consider re-entering with a trade. Specifically, I would recommend that you wait for the stock to drop below $116 for a better risk-to-reward setup. I will likely trade this stock, but I am not looking to rebuild a massive, long-term position until the valuation becomes more reasonable. Now I have to present an alternative scenario to you. It's possible that this was the major high for this entire cycle, and we could be entering a long-term bear market for PLTR. While I don't see this as the most likely outcome, it's a possibility you should always consider, because no analysis is ever 100% certain. But after this necessary correction, my long-term outlook remains incredibly bullish. I believe that once the stock finds a bottom and consolidates, we could see it double or even triple over the next 1 to 2 years, eventually reaching a price target between $260 and $300. This will be driven by the company's continued AI dominance and fundamental growth that will eventually justify the higher valuation. So there you have it. The fundamentals tell us the story of a great company with an overvalued stock that is a cash-generating machine. My technical analysis has helped me navigate the volatility and given me a clear plan for what comes next. I hope this analysis was helpful for you. Remember, this is my personal opinion and not financial advice. Always do your own research before making any investment decisions. If you enjoyed this video, please hit that like button and subscribe for more content. Thanks for watching, and I'll see you in the next one.